Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. It's April 28th, basically the last day of the markets month here. So let's jump right into it because we got the GDP numbers that we're looking for. So first one on deck is the GDP, or gross domestic product, for the first quarter. So this is our first glimpse of the first quarter's numbers, and as you can see, it's not the greatest. So our final number for Q4 was of 16 was 2.1%. Forecast was supposed to drop down to about 0.8%, and it came in a little bit lower at 0.7%. So, but again, it's a little higher than what the Atlanta Fed. The Atlanta Fed came out earlier this week thinking that it would be lower at approximately 0.2%. So of course it's a bit disappointing. A lot of it there. Part of it is we had a kind of a mild winter this past year, so we're saying the consumer spending was down a bit because, and we'll get that. We'll get three revisions. So this is the first hint of what we'll see of the first quarter, and then of course we'll get a revision next month, and then the final back in June. Also, we got employment cost index. This kind of gives us a gauge of what inflation on the job level of employment, cost of employment. And as you can see, we had the previous quarter was at 0.5% for the year end Q4. We had a forecast that was supposed to go 0.6, and it went up pretty high, up to 0.8%. This is something you definitely want to keep an eye on, see if inflation is going to start rising. Because if we see inflation going up, we see GDP going up, jobs still improve, then we're going to see more rate hikes down the line, which also leads us into next week. The Fed will be meeting next week, but it's pretty much zero chance. There hasn't been a whole lot of talk, primarily because they don't expect any rate hike into next week. Probably the big one, if there might be one, will be checking into June and probably September if there might be one. So there'll be a little bit more talk about probably in June when and if there might be the next rate hike. Also, we got the Chicago PMI, which is manufacturing in the Chicago region. And anything above 50 on these indexes are basically saying that there's expansion. So we had a slight expansion here. So back in March, we had 57.7, and it went up to 58 in April. So a little improvement right there. And last but not least, we got the consumer sentiment. We have two revisions here. So the previous initial one for the month of April came in at 98, and they thought it would remain that, and it actually dropped down to 97. So obviously that's a little disappointing to see that people. It dropped off in September, people's sentiment of where things are at and all. So overall, not the greatest numbers here. Chicago PMI has slight improvement, but employment costs going up. That's something to keep an eye on. GDP dropped a bit more, which is disappointing. And then, of course, consumer sentiment dropping a little bit. As a result, stock market's down. We do have some earnings reports going out. Nasdaq was up earlier this morning, and then just the overall market just kind of brought it down. It was kind of rejoicing because, as we indicated yesterday, we had a couple high-tech behemoths giving their earnings reports, and that was Microsoft, which came in a little disappointing, but Amazon and Alphabet, the parent for Google, came in with better than expected earnings reports. So that was helping out Nasdaq for a little while, and then again, just the overall market kind of brought it down into that trend, like the Dow and S&P. So the bond market, here we are. We're starting to get a slight uptrend upwards a little bit. As you can see, we did touch down off the 25-day moving average. Right now, we're fighting the 10-day moving average. So we need to see if we can break above that 10-day moving average here. Otherwise, as we go into next week, we're going, as this is starting to tilt in. Sorry, my arrow's not coming in here. As it's coming down here, we got our floor here. We're going to get squeezed, so we're going to be pushed into one direction or the other direction. And of course, the news are always kind of pushing us to go higher rates, as we go further along here. So just be very cautious here. But we got a slight improvement today, but not enough really to warrant a better pricing for interest rates today. We're only up right now about 6 basis points from where we left off yesterday. So I would say pricing's relatively the same as what we saw yesterday. All right, folks. So I hope you guys enjoy your weekend. But if you guys want to get more updates after the videos here, I do post on Twitter. You can find me here at Mike Bjork. Come over to Twitter and get further updates in case the market changes and whatnot. Also, if you guys are in the market looking for a mortgage for purchase or refinance, feel free to reach out to me. I am a loan officer. I can help you out with those needs as well. We'll get you pre-approved to buy your next property, or we'll help you out with different strategies on using your equity. Maybe you want to take money out and do debt consolidation in equity, or perhaps you might want to do a rate. Maybe you have a higher rate, want to go lower rate. Those are rate and terms. We can certainly help you out with that as well. Feel free to reach out anytime. Have a wonderful day. Thanks so much for watching. We'll see you guys on Monday. Take care.